All right. Welcome.
Thank
I'm
you.
Nick Katz. Thank you very much, Tom. I'm Nick Katz, the co-founder and host of Raise, a podcast and YouTube channel covering the truth behind the curtains of some of the most exciting early stage raises in the startup ecosystem. And I'm incredibly excited today to have a relatively new friend of mine, Tom Sharman from Blok, tell us his story and dig into the details. So, Tom, why don't you give us a little intro on who you are, what your company's all about, what stage you're at, some quick basics, nutritional facts on the raise that you've just done, any other raises, and then we'll jump into some questions.
Yeah, for sure. No, first of all, thanks for having me. I'm Tom. I'm a data scientist by background. I started my first company about 15 years ago, but have always been passionate about understanding and predicting human behavior. And after a journey of building startups, what we're building today is a company called Blok, which is a simulator for product teams. So being in a position where we can map out and predict how humans are likely to behave to product experiments before you go through the process of essentially building them live, saving teams a whole bunch of time on engineering, a whole bunch of time on just waiting for experiments to converge or to get statistical significance. But the longer term goal really is to begin to move towards building a model that helps us build better products for humans. I think as time has gone on, the world has just become very generalized, and we're stuck with these one size fits all interfaces. We're building a world that allows us to begin to personalize user interfaces for consumers. Yeah, we're a team of 10 people, 11 people now, largely PhDs, research engineers, kind of backgrounds in ML, AI, etc. Myself and my co-founder Olivia, we're building our third company together. So this is number three for us. And yeah, we've just come off the back of a $7.5 million seed round.
Amazing. So maybe just in a sentence or two, if you had to really simplify and dumb down the proposition, what is Block? Why does it matter?
Yeah, I think like for us, the way in which products have been built up until now has just been unilateral, one size fits all. What we're building is a simulator that allows product people to see how different people react to different experiments before they go through the process of building them. Um, and the reason that we're building this is because the average experiment takes 4 to 6 weeks often to converge. And what we've built allows you to simulate and predict how customers are going to behave within hours. So instead of spending 4 to 6 weeks for data, you're able to get preliminary results in hours, which will then give you the ability to work out whether you want to actually run that experiment live or not. So it saves you a whole bunch of time and money. Also gives you better insights to see which experiments you should be running for your organization. So in theory, what we're building here is a way for you to build better products.
Maybe I will just try to remix it, but I mean, it sounds like you're potentially, at least the dream, and I know you're already doing it to a certain extent. You're exponentially speeding up the build, measure, learn iteration cycle to run a growth process as a startup.
100%. Yeah, exactly.
Super cool. Um, okay, so first challenge for you, fundraising. In one word, what's the word that just comes to mind, comes out of your heart, just lands like your raising in general? What's the word that just screams out of you when you think about it?
Um, Intense is probably the best word for it. Yeah, intense, the word that comes to mind.
Okay, great. Well, that I'll have a lot of questions on that, but I can appreciate that one for sure. And what about, I don't know, the biggest myth related to raising money, something that you believed before you started raising that you've kind of punctured or even popped having gone through it. Anything?
I don't know whether this is like specific to San Francisco, but that cold outbound works. I think like it doesn't work. Cold outbound is just we did our round entirely warm introed, but I've helped a lot of founders since, and I've kind of come to the point now where I just say like if you're doing cold, like it doesn't work anymore.
As I was saying, we're going to try to go to the build up and then the meat and potatoes of the highs, the lows, get into as much detail as you're comfortable getting into, really, around tactics, strategy, what was actually happening behind the curtains of the raise, and then, what the world looks like now that you've got the cash and actually have to figure out how to spend it.
Yeah,
Um,
100%.
so I guess just like a giant step back, like what was going on in your life life and business when you kind of decided this raise was the right thing to embark on?
Trying to think. I was still living in London.
And
I think
tell us some dates and timings.
yeah, so it probably would have been like August, September 2024. We'd been playing around with an idea for a little while. We were like kind of bouncing ideas around. We'd pivoted a couple of times, trying to kind of work out whether this was actually a business that should be built. But I think we kind of got to August. We were doing a lot of customer interviews. We were interviewing a lot of product teams and trying to understand like the core pain points that people faced. We knew we'd built some interesting technology, but we were also kind of like, is this something that has applications? And I think in the end, we, after interviewing 100 product teams, realized it definitely was. So then we set out to raise some money. And I think the first big check came in just before we went over to France for my co-founder's brother's wedding.
Cool. Okay. So I guess with your background, with your knowledge, with your technical prowess, like why raise money in the first place, and how and why did you end up at 7.5 mil?
Yeah, I think main reason for raising money is we knew that it was going to be fairly capital intensive in the start. Um, Generally speaking, what we're trying to build here is a fairly deep tech play. It seems easy on the cuff to, kind of build something out, but I think as we're moving towards a world where computer using agents become more goal oriented, and with LLMs already having a personality, actually building something that is able to predict and infer human behavior is harder than you think. So I think the thing for us is we knew we were going to have a good, strong team behind us of PhDs, of research engineers, of people that really understand the core problem. And yes, it's a good revenue generating business and has been from day one, but we're not cash flow break even yet. And that was the main reason for going out to raise. In regards to the 7.5, I think so we actually did it as two very quick rounds. So we did 2.5 million in November, and we followed up with another 5 million a few months later, 3 months later. And that was fairly opportunistic. We were preempted by a fund, and we spoke to some of our angel investors and said, like, do we take it? Do we not? We don't need the money right now. And the feedback was, well, run it as a process over 2 weeks. See if there are any term sheets that you get at the end of it that you like. And if there are, then take them, because then it gives you more time to basically build out the product and work out where you want to get to. And we did that. We ran a process over 2 weeks. We found the VC that we really liked. Basically reference checked them against 9 other founders who'd also taken money from them to work out whether they were the right VC for us. And I think it became pretty clear to us based on the feedback from those founders who basically unanimously said, if this company failed and we were raising money again, these would be the first people that we talked to. For me, that was the big indicator that said this is the right fund for us, and that's why we, in the end, decided to move forwards with them.
9 reference calls. That's some good due diligence. I like it.
Yeah. I was. We had a few term sheets, and I was trying to pick between the ones that we liked. And really, it came down to, well, I'm going to speak to as many people as possible to work out who the right people are. We had some more traditional funds based up here in San Francisco. We had some funds down in LA. And honestly, it got to the point where I was coming onto these calls with founders and being like, tell me something bad about the fund. Tell me why you wouldn't take money from them. And no one was able to give me a reason. So for me, that was enough to either say they've either been coached really, really well, which seems unlikely, or, they genuinely are one of the better funds out there. And that's why we move forward with Mac.
So yeah, with that kind of praise, let's give them a shout out. Like, tell us about them, who they are, what partner you were dealing with, why they've been so awesome for you. I think it's worth a quick segue onto that while we're on it.
For sure. So, Protagonist led our pre-seed. Protagonist was started by the founders of Pipe and Honey. So Harry, who's actually a Brit as well. So honestly, the minute I met these guys, I got along with them straight away. Me and Harry see eye to eye and kind of the way the world is going from that perspective. And he's been super supportive from day one. Every time there's something that I have a question on, I can just drop him a WhatsApp message. He'll always respond very, very quickly. And then for our seed round, it was Mac Venture Partners. So they're based down in LA. We were working with Marlon. Honestly, like Harry and Marlon have worked. So Marlon and Mac Venture Partners actually invested in Pipe, which was Harry's business before he started Protagonist. So the guys know each other really well. And I think, I was able to I was able to reference Mac from a VC perspective, but also from a founder perspective. And just had a really good process throughout. They were very quick, they were very positive. They had lots of fairly innovative ideas in how we were building the business. And I think I felt that as we begin to build a board and begin to move forwards as a business, they would be good people to have on the board. And they would be supportive as we go into later rounds, into raising the Series A, the Series B, etc.
Awesome. Okay. And so the 2.5 million you raised as like the first portion of this round, roughly when
Yeah,
was that closed?
November.
So that's November 24. Yeah.
Yeah,
And
exactly.
then Christmas happened, and then you're building the company, your metrics are doing whatever they're doing, which I want to ask as well. And then you get some advice to run a super tight process opportunistically to bring in more capital, and that's more capital in the same exact terms as an extension of
No,
the round or a new structured round.
a new round entirely. And yeah, we ran that as 2 weeks in February, March. I think last week of Feb, first week of March from the back of my head.
2 weeks, so we're talking like 14 days, pretty much front to end. Nice.
Honestly, I said at the process, start the process when we were talking to people, in 2 weeks' time, I'm making a decision. If there are no term sheets at the end of it, the decision's been made for me. If there are term sheets at the end of it, then I'll reference them and work out whether they're the ones that we want to move forwards with. Um, and yeah, at the end of that 2 week process, I was kind of like, well, there's a few term sheets here, and these guys are the ones that we're going to move forwards with.
Okay. So during that 2 week period, just as a maybe a note or a lesson for anyone watching and listening, how much of your time, how much of your calendar was dedicated to the fundraise versus the business?
Every single waking minute was dedicated to the fundraise.
That's what I would kind of expect and kind of hope to hear. I feel like not every founder manages to treat a raise like that. And leading up to that 2 week tight process you ran, how much of your time was also dedicated to like preparing, getting the business ready for the raise versus kind of day to day running of the company?
It was probably a week of intensive getting it ready, speaking to our angels, setting up kind of, the funnels, and kind of reaching out to people that would be friendlies and do the warm intros for us, so that we could hit the ball running on that Monday and say we're booking in calls for the next 2 weeks and then we're making a decision. So there's probably a week of that where we then moved into that 2 week period of, yeah, I was probably like locking in 8 hours of calls a day, to work out who would be the fund that we want to move with. And some of them, first, second, third calls, some of them are ICs, but like, yeah, typically speaking, I think we probably spoke to 40 or 50 funds. There are a few that said no to us, there are a few that we said no to, and then we ended up with a collection of funds that we liked, and then we went through the throes with to work out who was going to be the one that we'd move forwards with.
Okay. Okay. Very interesting. Um, can you give us a flavor of, and I mean, I'm always conscious that, you you have to be as transparent as makes sense for your company, your industry, but part of the point of this whole channel is to expose as much as possible to kind of help the next generation of founders figure out the dark art of raising. So as much detail as you can share, please share. And if you can't share the specifics, just say. But like from a metrics perspective, like what metrics were you raising on? Can you be specific about what those metrics like were? Are we talking engagement metrics, revenue metrics, like you know, like gaming style metrics of people coming back to the platform? Like paint that picture for us, but especially from like I guess the beginning of Q4 to when you close this next bit in Q1 of the next year.
So we didn't have like engagement metrics. It was too early for that, but we'd had our first customers go through as design partners. We typically work with enterprise customers, so like the contract value for us is significantly higher than your average company.
What kind of
We're
value?
talking kind of six figures on an annual basis, depending on the size of the org. But like typically speaking, they're big contract figures. So I think we already had the first five that had gone through that. I think the thing that helps us a lot as well though is we already had a wait list of over 100 companies as well, which made it easier for us to essentially say like, well, these are the ones we're confident about, these are the ones that we're not so confident about. And as part of the due diligence process, we went through that pipeline and we were talking about how confident we are about some of these passing and some of them falling, and what we would want to hit by the end of this year. So I think that was the kind of core I think we approached this as we weren't just a business building some interesting technology. We were a business that was making generating revenue from day one.
Okay. Okay. Cool. Um, what did you think this fundraising process was going to look like going in? Because it sounds like you obviously planned for the November 24 raise, and then a few things changed. I know from previous conversations you've had a few investors that have been particularly meaningfully helpful to you, and this kind of opportunistic thing like sprung up. So like what were you kind of imagining your fundraising plan looked like, and just tell us a few of the variables that changed for you to get this, I guess, opportunistic moment in time that you capitalized on.
The honest truth, thought I'd be laughed out of the room. No, it was like there's no way we're going to raise money on a significantly higher valuation cap than we did for the last round.
Why?
You know,
Why?
I
Why?
kind
Why?
of
Why did you think you'd be laughed out the room?
call it the European me. Call it the European in me. I think, like, you know, there were meaningful changes in the business, but not meaningful changes to justify where we were. And I think because it was preemptive, it was slightly different in that people were looking at this as a speculative bet as opposed to kind of like this is where they are as a business now. So I think a little bit of that was, being in this position where we had to be confident we could grow up into the valuation that we wanted to grow up into, and we have done that now. I'm confident that we're getting pretty close to that now. Honestly, are beginning to think about what next, in the sense of we're not going to be too far away from our next round. But I think the honest answer for the opportunistic raise is I was very much of the view that we wouldn't have any term sheets at the end of it. For the November one, it was a little bit different. For the November one, like we had a very clear goal. If we wanted to raise 2 million, we ended up raising 2.5. And once we had the first kind of couple of people drop, everything fell into place.
Yeah. And tell me about a few of those early investors that came in and why they were so impactful.
Yeah, for sure. So there's one that I remember fondly. Basically, a friend of mine called Charlie, who works for Anorak Ventures now. He had at the time sold his company to Holland and Barrett. He was living in the UK but moving over to San Francisco. And he was like, "You should talk to one of my friends. There's a guy called Ben, head of product growth at Discord. It's something that would probably be up his street. He's an angel for the first round checks." And I had my first call with Ben, and he was kind of like, "Yeah, it's interesting, but like I don't really get it." So I was like, fair enough, makes sense. Like big enterprise, maybe they're not the right customer for us. Went away, thought about it, did a little bit of, kind of like speaking to more people, which just helped me refine the pitch a little bit. And then I went back to him and I said, like, this is actually what we're doing now. He kind of turned around and he was like, okay, this is a little bit more interesting now. Put me down for a check.
What size check?
So it's a small scout check from A16Z. So because he's a scout for A16Z. But then he introduced me to a couple of his friends who are scouts for Greylock, other A16Z scouts. Basically, like the Discord mafia, as I refer to them now. So it's former heads of products and engineering at Discord, and that was super helpful. That then led to a couple of other people being introduced to me, which then led to a few more people being introduced to me. Basically, the story goes on. And then over probably a 3-week process, we went from no money to full 2 million, and then shortly after 2.5 million being fully committed. I think the kicker was Charlie, who originally did all the, like I say, he's one of the, there's a couple of core proponents that did introductions for me, and Charlie was one of them. And I never asked him whether he wanted to angel invest. Fortunately, to yesterday, he joined the round.
Oh, that's great.
He's a good guy, and he basically, it was that catalyst of going from finding those first believers, and when you've got those first believers that honestly they don't care about the product, they believe in the team, and once you've got those first believers that believe in the team, then it's easier to begin to build out a process and find more people that will either use that capital from that social capital from the people that have done the introductions, or you do a good pitch and they believe in you as well.
Yeah. Well, I know we've also chatted about the whole UK/Europe versus US thing, but one fascinating dynamic is obviously we've kind of made friends in the European ecosystem, and a few of these key people that you've mentioned came out of that ecosystem, but they're kind of handing you off in certain situations to American counterparts that they have interest in. And it's something I've certainly noticed in my own fundraising journey is there's something about getting Americans, not Americans, but folks on that side of the pond, they can be from anywhere, to believe and take a bigger bet, frankly, quite a lot quicker than European counterparts that want to see often more proof points. And just wondered if you had
Yeah.
a bit of commentary on that. It's interesting because it sounds like a lot of the initial hooks were from the European ecosystem, but at a certain point, it felt like it maybe tapped out for you and you just got pulled over there. And then you did the thing that almost no one does, which is you went to the Valley to live, not to just show up as a tourist and try and raise money and then jump back to the UK. So, sorry, that was a very unclear question, but I'm interested in the cultural discourse and the different people on both sides of the pond that helped you and how that kind of played out and what was good, what was bad. Any advice you have for folks?
For sure. Like, I'm not going to bash Europe because I think I do it a little bit too much. And I don't mean to do it. It's kind of like I start having a conversation and then say some things that like I don't mean. I think the honest answer is Europeans move slower, which is unsurprising to everyone. I think the issue that we have in Europe is we don't focus on the right things at pre-seed. Too many investors will often say they invest at pre-seed, and really they're looking for seed metrics. So we spoke to some of the funds in Europe. We had initial traction. We had unfortunately a bad experience with one fund where basically like term sheet disappeared, which was one of the drivers that drove us to the US. So I think like we'd experienced some just there's a couple of things like European investors move slower. European investors are often not operators, which we all know as well. Like they don't come, they're not ex-founders. But I think the actual biggest problem that exists in Europe, which is a really easy problem to solve, is founders don't like to open their network to other founders in the same way that they do in the Valley. In the Valley, like everyone treats everyone as an open conversation, and like, look, you have to be careful and you have to protect your network in the same way that you do in Europe. But being much more open and opening the conversations and kind of having those relationships with investors, like people don't realize that when they ask me for introductions to investors, they are doing me a favor because they're giving me a reason to reach out to an investor and continue to build that relationship with them. That doesn't seem to exist so much in Europe. And I think that's one of the kind of core drivers as to why we decided that building out in the US was the right move for us. Honestly, the reason for building out in the US didn't come down to the fundraise. It came down to the fact that coming out to San Francisco, the speed at which the city moves is phenomenal. The expectations people have are incredible. It's a very fast-paced moving city where the expectations and the drive of people are significantly higher than they are in most other parts of the world, including other parts of the US. So I think it's both easier and harder to raise money in San Francisco. It's easier because, yes, there is more capital here and there are more people looking to place bets. It's also harder because it's where, frankly, the best people in the world come to build from that perspective. So I think, and you can challenge me on that. I think there are good people in the world that are building good companies as well. And I would also say that I think some of the best research engineers and PhDs are not based in the US and they are based in Europe, which is an alpha that we've been able to take advantage of. But I think generally speaking, it moves faster as a city and there are just kind of more opportunities from that perspective. The caveat I will add is one bugbear that I really have is European founders saying that they're going to come to San Francisco for 2 weeks to raise money. I see it at least once a week. I have at least one person reach out to me and say, hey, I've just arrived in San Francisco. I'm going to be here for 2 weeks. Can you make a load of introductions to VCs for me? Would really love to raise. For me, when a founder does that, they are not, and to be fair, to some extent we fell for it as well. They're not prioritizing the right way. If you want to raise from the best investors in the world, then you should start by raising from the best investors in the world. San Francisco doesn't look fondly towards the tourists that come in for 2 weeks, and pretty much everyone can smell it out. Which is why you have to come and spend a prolonged period of time here to successfully raise money in most cases. I've seen cases where that isn't true. But in most cases, if you want to build around the is led by US investors, you have to be very ready for the fact that you will also be living in San Francisco.
Makes total sense. Makes total sense. So I feel like you've already hinted at some highs and definitely some lows with that term sheet that kind of self-destructed. Can you just give us a little bit of color on if you can think back to your best day or your best moment on the fundraise, and also your worst day or your worst moment?
Best day was unquestionably when we were at my co-founder's brother's wedding, and
In
Ryan
France.
Hoover from in France. And I had a call booked with Ryan Hoover from Product Hunt. So he runs a fund called Weekend Fund. Also another investor that I would absolutely shout out as being one of the best out there. He, I was kind of like, this is a tier one pre-seed fund. There's no way that they're going to be interested in us. The internet's really bad. Is there any point in me even taking the call? And like, obviously I was going to take the call, but like, I was feeling a little bit like, should I just reschedule basically? And I kind of said to myself, that's not conducive to a good founder. So like, I'm going to take the call. I'm going to find a way to make it happen. I jumped on the call. I think everyone was out at dinner or like kind of like celebrating the wedding, and I was like, I need to disappear. I've got to go and take this call. So I disappeared, took this call.
Does Ryan only do calls for Weekend Fund on weekends or what?
It was a coincidence. and I honestly just like, we got along really well. Like he really got what we were doing. He understood the problem, I think, particularly given the fact that he built Product Hunt. And we kind of like jammed on it a little bit. We like talked a little bit about the long-term vision of the company. And he was like, look, I want a couple of days to debrief on this. Came back on Monday and was like, we're in for I can't remember the exact amount, but we're in for the round. Came in on the round, super high. Because actually the intro that it had come from was someone that we really wanted, who ended up not investing. And he'd basically been sent us as like a reference check, I think, like as a back channel. And it was just, he was the perfect investor from that perspective. So I think for me that was definitely a big high.
Wow.
And
that was like 48. That was like 48 hours back to back, something like that.
Yeah.
That you told me, right?
Yeah,
From
100%.
First call to end. Wow.
Exactly. Yeah. And there were others like me and Harry. So Harry from Protagonist, the one that led our pre-seed. I think we had like a 13-minute call. And at the end of it, he was like, I'm in. This is how much we want to invest. And I was kind of like, I was at a conference and I was like, I'm not going to have good internet and maybe I should reschedule. And I was like, no, we need to do this. We need to make it happen. And I remember being sat on the call with him, and it was a pretty intense conversation because it was very short but very intense. And about 10 minutes into the conversation, I was being kicked out of the room. So I'm there walking around this conference, holding my laptop, trying to kind of listen to him asking questions and answer them and like make sure that I'm giving a good impression and like talking about what we're building. And then I sat down and I was sat next to Olivia, who was kind of like confused because I was there on this like perched on the floor trying to take this call. And Harry was just like, I'm in, how much do you need? And then we obviously went through the conversation and he came in and they deployed the capital, I think, like 2 days later. So 2 or 3 days later after they did the due diligence. So those are the kind of investors that you want. Those are like when you find these high conviction, good investors, they're nearly always operators. They nearly always former builders because they know the trials and tribulations of fundraising. And they move quickly, and it's the biggest thing you can ask for as a founder. The negatives, there are a few. Fortunately, they do relate to Europe. And I want to see Europe change, as I say, I don't want to bash on Europe. But I think the process that I faced when we were starting to talk to people in Europe was often, we can book a call in 2 weeks. Which was kind of a little bit like, okay, this is strange. Most people in the US want to book a call in a day. So I think that the kind of waiting game was frustrating, and I've seen it most recently with a couple of friends of mine who have had to play this waiting game and have gone from saying, we're really excited to, why can't the weekend be over already? I just need a decision sort of thing. So I think the waiting game is frustrating. The lowest point was obviously when the term sheet vanished. Won't go into too much detail because I'm not going to talk bad about a fund, but also I don't really know how that whole situation unfolded. It went from them being super excited to them basically ghosting us after giving us a term sheet.
So literally, but to go into as much detail as you can without maybe naming them if you feel uncomfortable, although that would be useful. Um, they just never responded to you ever again, and they'd given you a term sheet, or like what like mechanically unfolded.
They gave us a term sheet, and then they basically said, "You've got 2 weeks to make a decision." And we had a couple of other people that we were talking to. In the end, we wanted to move forwards with them, and we went back and we said we're ready to move forwards. And the only caveat is that we want to raise this, so you need to give us more money if you want to lead the round. Didn't hear anything for a week, so I was kind of like, that's the first big red flag. And then got an email from them. And I think the real gut punch for me, as I say, I won't name names, but if they do end up listening, I think the real gut punch for me was getting a message from an analyst, not the partners that I'd been speaking to, basically saying, we went back to the IC, we had a discussion, and we've decided not to move forward based on the fact that you want to raise more money. Which doesn't make sense in itself, because surely you would then just raise at the lower amount. But so there was something there. I don't know whether they didn't like me, whether there was something there was something that they just didn't like for whatever reason, and they decided to pull the term sheet. Which, again, you look at San Francisco, a term sheet being pulled is just about the worst practice you can do. So I think from that perspective, it was a real gut punch. And at the time, we were a little bit like, okay, so what do we do? And we went back to some of our angels and said, like, this is the situation, this is what's happened, like, what do we do? And all of the angels basically just said, stop wasting time in Europe, get on a plane, come to San Francisco, and have some of the conversations that you've been having here. And we did that, and we closed around 2 weeks later.
Wow. And that trip to San Francisco, that wasn't just to have investor conversations. You decided to move with your co-founder.
Yeah.
How did that decision happen? Because I've had this conversation dozens of times, and it's like, you want to raise there. The requirement usually is that you live there. People don't get it. They're like, well, if you give me a term sheet, then I'll move there. And everyone's like, hey, you move here, and then we might give you a term sheet, is basically the understood reality. But like, what gave you and your co-founder the chutzpah, the confidence to just pack your bags and move? Or had you already wanted to move?
I think we'd been back and forward with previous companies that we'd built in the past, and we always knew that San Francisco was a good place to be. It was just we'd always built companies in the UK and got them to the point where, it wasn't so easy to just get up and move. I think what we decided to do is we said, let's go and spend 3 months over there and just go to a bunch of events and get to know people and see like whether this is a place that we could see ourselves living. And I think, there's lots and lots of pros to building a business in San Francisco. The cons are like, it's a very transient city. It's hard to make friends, all of the kind of like things you can imagine from that perspective. So I think we really enjoyed the 3 months that we were there, but we were a little bit like this is going to be a tough place to live. The food isn't as good. I think the bread, it's like, I don't know if this is true or whether it's an old wives' tale, but like the bread would be illegal in Europe, just because of the like additives in it. I don't eat bread while I'm here in the US. With exceptions, like obviously if I go and eat it at a restaurant, but I don't buy bread at a supermarket, for example. The food was less good. I'm a big foodie, so that was a big question mark for me. I think making friends was a little bit more tough. But I think one of the things that I've been doing in Europe was dinners. I'd basically bring together founders every month, and basically it was to like talk about some of the highs and the lows, and have an honest conversation about how we can all support each other and help the ecosystem grow. Because again, like I want Europe to thrive and succeed as an ecosystem of founders. And when we got to San Francisco, I kind of said, well, I'll continue doing these dinners. And the difference is it's really expensive to eat at a restaurant in San Francisco. So like doing them, at a restaurant is going to cost $100 a head instead of like the 30, 40 pounds a head that people were paying in London. So we said, well, why don't we just start cooking for people? We'll just start basically doing these dinners. Me and my co-founder will bring 15 to 25 people into the house. And we'll just do a big dinner where we'll cook everything because we know how to cook pretty well from previous companies that we've built. And we did that, and that helped us break the network pretty quickly and begin to find our network of people. And once we'd found that network of people and started having some of these conversations with VCs and just trying to be kind of as thoughtful as possible in the Valley, we began to realize that this was definitely going to be the right place to build the company.
Very cool. Okay. Yeah, you made a series of fairly committed moves on your path to moving full time. Okay. It was even more
100%.
intentional. Yeah.
Yeah.
Okay, well, we've been chatting for a while now, but maybe just like anything from your toolbox, like just tactics, software that you used that was super helpful, frameworks that helped you, like how you structured your outreach messages, like just some like tactical, gritty stuff. Tell us, because I know you're a man of many smart software tools, including the one you're building. So tell us.
For sure. So, Airtable or Sheets, we used both, depending on the race, for like tracking everything. I think and it was as simple as that from that perspective. Like, I think that's probably as advanced as it needs to get. Really, where you need to be spending the time is working out who can do the instructions for you, and essentially who can, you know, make sure that when you're ready to kick off a raise, they can make the instructions as quickly as possible and set those conversations going. Um, and the best thing you can do is take the couple of weeks before a raise to build a strong funnel that you can then tie everyone into a short period of time. And it doesn't have to be 2 weeks, it can be 3 weeks, it can be a month, but the shorter and more intense the period, the quicker that you're going to be able to get people to make a decision, because you go from nobody's heard of you to everyone's heard of you. So suddenly everyone needs to make a decision fairly quickly. On
So
the
tell me. Oh, sorry. Keep going.
No,
I'll
you go
come
ahead.
back.
Go ahead.
I'd love to know a little bit more about that funnel. How did you define your ideal investor profile? The sort of IIP, as I call it, and how did you like just practically stack that? Did you delegate everything to your team and say, I need 3 weeks of just me time with my calendar? Like, whoa. How did you find the IIP? How'd you define it? How'd you ask for those intros? How'd you make space in your busy schedule?
So the team at the time was me and Olivia. So there was no team from that perspective. And I basically said to Liv, yeah, you're going to be doing everything for the next 2 weeks. I'm going to be focused solely on the fundraising. You're probably going to have to jump on some of these fundraising calls as well.
How did she take that? Was she fine with it?
Yeah, she was. I mean, we've raised together in the past, so she knows what it's like from that perspective. You know, like in the past, we've had our third co-founder, Kurt, but we decided to build this one. So I think from that perspective, it was just a case of like saying to her, you're going to have to pick up on the slack of, doing some stuff that I was doing so that we can focus on getting the raise out of the way. In regards to, what was the second half of your question?
Uh, how did you define who your ideal investor profile was, and then kind of engineer messaging and all that stuff to get to them?
For sure. I'm trying to think how. I think GPT played a pretty big role, actually. I think there's always been these like sheets that go around, and they're like, here's all the investors you ever want to speak to. Like, I'm not scrolling through like 52,000 names. Like, it's not a good use of my time. And I think like it's the first time where we've had GPT and just like wider LLMs as a way to distill information. So we were pretty good at distilling that information down, and identifying who we wanted to target. For us, the core focus was we wanted product experts that really understood the product problem that we were trying to solve. We wanted people with deeply technical experience who would be able to solve from a tech perspective. And then we wanted kind of like a couple of more generalist investors. And, Ryan filled the product question mark for us. Kevin, which is, he's the GP of a fund called Rackhouse. He filled the deep tech question for us. He was the first data scientist at Uber, and invented all of the surge pricing, so like very deep data science background. And then, the more generalist, or the more generalist was more so that we could find the right customers that they could introduce us to. So we had a combination of smaller funds that came in and helped fill the gap for that one, where they had like larger portfolios of companies that could help us they could introduce us to the companies that we wanted to speak to, and they kind of filled the gap from that way. So I think that was the way that we did it. The other thing I would add is, we started using DocSend, and we'd built the deck in Pitch. Pitch is my favorite tool for building decks. But then Pitch introduced a new bit of their software which allows you to just send a deck, and basically like do the same thing that DocSend does. So then we ended up dropping DocSend and just focusing solely on using Pitch for our, for sending the tooling of the deck itself, and then the data room was in Notion. So it was just Pitch and Notion for the documentation side of things.
Cool. Okay. Like the stack. Makes sense. Bunch of little nerdy fundraising questions, but I'm going to skip them because we've been chatting for quite a while and this has been amazing. Let's just skip to the funding now being, I guess, done, at least for the time being. That kind of slide that's in everyone's deck, which is, use of funds, as you've allocated for all the stories and the truths you're telling potential investors, and then the money's in the bank and now it's actually time to spend the money. What's changed? What have you learned? How are you feeling about the actual now? Like, I mean, it's a bit VC-ish to call it deployment. I mean, you're now like spending, you're burning, but like, yeah, what about what you thought you would spend the money on versus how you're actually spending the money? Has anything changed? Have you learned any things? Tell us about that bit.
So we never had a use of fund slide. So in regards to like how we thought we'd spend the money versus how we are spending the money, difficult to tell. But no, in all seriousness, we knew that team was going to be the biggest burn. I think we've managed to put together a pretty killer team at a very reasonable price, which I'm really happy about. So one of our advisors, who's a former Unicorn founder, has joined us full time, which is great because like super. Incredible experience from a technical perspective, but also an incredible experience from like management perspective as well, in the sense of building and scaling a team. We've got research engineers from Berkeley, we've got PhDs from Harvard and from Stanford. So I knew that like cost was going to be there on that side of things. But I also like have been pleasantly surprised by the American mindset, which is we're building a generational company here, and we need to make sure that we don't burn through money too quickly so that we can build that generational company. And where that's often just like the founder, it does extend down into your early team often in Europe, but it's just like there's a different mentality here in the Valley where people are very much focused on, let's just focus on building the best possible product and giving ourselves the best head start that we possibly can now, and worry about money and stuff later. So I think from that perspective, we've been able to bring on some incredible minds that have helped us build out where we've got to now. And yes, the core cost is still going on hiring because that's to be expected with what we're building. Maybe the only other thing that like I'd planned for but hadn't planned for quite so much was the cost of compute. We didn't really know how much it was going to cost to run some of these experiments that we're running because they're pretty heavy in compute, given that they're doing fairly technical tasks. Compute's getting cheaper and cheaper, but it doesn't seem to be affecting how much we're spending on compute at the moment. So there's definitely a significant cost base there as well.
Okay, fair enough. Amazing you got away without a use of funds slide. I'll have to interview you separately on that one. Okay, so maybe a couple kind of quicker questions, and some reflections from you. Like, if there was one thing you could tell yourself pre-raise, if you could go back, what would it be?
Just keep going, because like honestly, I do have the belief that there is money for everyone in the world. It's just about finding that right person. And kind of, I think one of the other like I guess glass ceilings or kind of whatever has shattered is that the best funds in the world are the people that you want to take money from, because there is no real best. Like, yes, there are the best performing funds for sure. Like there are funds out there that have far higher IRRs than other funds, but I think often the best is construed as they're the best at marketing themselves, because I've met some incredible smaller funds that have made bets that have some of the highest returns on investment that no one's ever heard of.
Who's one founder or one fund or one angel that you just think more people should be following?
I'll give a couple,
Okay.
which I'm breaking your rules. Um, Samit, who he used to be the director of engineering for Discord. He's now building a company called Crafting. He's one of our angel investors. Um, we're doing something together in the near future. It's about kind of forward deployed angels. So, you know, the best angels that you've worked with. How does this conversation happen? What do these angels mean? Sort of thing. I genuinely think he's one of the best angels I've worked with. Another angel and unsurprisingly former founder is Chris Neumann, who used to be a partner at Panache, which is a fund based in Canada. He left Panache and ended up investing in us afterwards. Incredible, like, angel investor, always there to help, always there to support from that perspective. Thinking on the kind of the founder side of things, honestly, there's so many that I could name from the kind of founder side of things. So I won't do it now. I won't do it now.
Okay, fine. All right, last couple things just about you. Like, where can people find you if they want to find you online or in the real world, dare I say?
Yeah, in the real world, I'll be in San Francisco, so always feel free to come and like find me out. LinkedIn is probably the only channel that I post on socially now. And then, of course, like, yeah, come to the website, which is the worst website spelling in the world. It's joinblok.co with 1K with no C and .co instead of .com. So, yeah, good luck finding it. But, there's a reason that we're going for a rebrand. So it's fairly unsurprising.
Well, a rebrand, can you give us any secret market intel on what that could look or feel like? Or no, it's all
Yeah, but
under the
it's
shroud of
still
darkness. Come on,
it's under
Tom.
the shroud of darkness slash doesn't exist yet. So we're working
Okay,
on it.
fine. Fine. And last thing, like, one ask for the audience.
Yeah, I guess, like, honestly, the biggest ask is for anyone out there that's building that wants to, run better experiments. I think the thing I will say is Lovable and Bolt have done to engineering what we plan to do for product experimentation. So you can 10x the speed at which you're deploying code now, thanks to Lovable and Bolt and various other tooling out there. We now want to do the same thing to product experimentation. We want to make it easier for people to run, build, and deploy quicker.
Amazing. Tom, thank you so much for joining us. This has been amazing.
No, thanks for having me.
Awesome. See you soon, man.
See you
Cheers.
soon. Bye.